Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Monday, April 8th, 2019. So let's talk a little bit about GE General Electric as it collapses today after a significant downgrade. The stock actually had been forming a triangular pattern. You can see it right here and right down here as well. And essentially what we know about triangles is that as they form, in fact, you could actually draw the line from all the way back here, which is kind of cool. But in any case, as they form, it tells you that at some point you're going to see a major breakout or breakdown. Triangles, again, come to a head, right? So you have a wide area here for it to gyrate, and then it gets tinier and tinier, and then it has to go one way or the other, right? Because it meets right in that point. In this case, you had a breakdown. Now, a lot of investors are rushing to buy GE right around this little pivot low here. I think that's a mistake. All right, I'm going to tell you why. So, number one, you could see that a longer term trend line was broken. So, if you take this low pivot right here and connect it to the low right there, look at this. The last 2 days, this was telling you it was going to break down. Pivot low to pivot low. And look, the last 2 days, Thursday and Friday last week, you got underneath that line. So, right there, that was telling you a breakdown was going to come. And the thing is, even though this is a little bit of support right here, there's a gap fill below that this is going to touch easily. All right, this is a no-brainer. This is one of those trades where, in the very least, it's going to go there. I actually think it'll probably go a little bit lower. So you're looking at a move down to about like 875 minimally, and likely you'll get a significant bounce there because there's a lot of choppy support. You can see all this kind of flat top action. That's telling you there's a lot of support there, plus the gap fill. But ultimately, it wouldn't surprise me if this longer trend line here, the breakdown, is actually a significant move to the downside. And your next target on GE would be down here around 765 or so, right there. So again, what I would say to you guys looking at GE, I've been asked a lot of this by members, where do we buy this? Is it a good buy, etc. I would say don't buy it here. It's going to go lower. Okay, it's going to minimally go to about this 875 level. If you want to nibble there for a quick swing trade bounce, I wouldn't talk you out of it. I think that's fine. But again, expect it to be a shorter term trade. 1 to 5 trading days type of thing. Get a bounce, exit, and then look for the next leg down. Once it gets down here, I actually will start to like that myself for a longer swing trade. So you're looking at the 765 level as being a longer term swing trade bounce play. And the nice thing about 765 is that even if it goes down here, you have a very defined stop pivot where if it gets below this low pivot, you just stop out. And again, it's not that far away at that point, so you're not risking a whole lot, which is always a benefit. Okay, let's talk a little bit about Apple, which is kind of on the other spectrum. Apple trading up beautifully today. You can see the melt up beginning. Really, Apple's been on a nice vertical rise, but really the last few days, even when the market was flattish last week, we would see Apple sharply higher. Today's a good example of that. The S&P 500 is flattish to negative, and Apple's still up about 1.3%. And the key is you have to understand what's going on here. First off, look at the price, 199.5. So anytime you get within a couple dollars of 200, there's an automatic magnet effect. And by the way, 200 is just a 200. It could be 100, it could be 300, it could be 1,000, it could be $50. The even numbers have a draw to them like a magnet. When you get close to them, you're going to see buyers push it up, algos push it up to that even number. So in the very least, I think today it actually will touch, we still have about, 2 hours left in the trading day or so. I think you'll at least touch 200 today. And my guess is you're actually going to go a little bit above it. There's a gap fill. So there's a pivot point right here, just above 200, and then there's a gap fill right there. My guess is this is going to be your top area. In fact, this is where I'll look to add. I'm short right in this range, but I'm going to look to add to my short right around this level here, which is right around 202 to 204, somewhere in that vicinity. And I think that'll be a perfect little setup, and I would expect a beautiful pullback on Apple. And actually, I think when Apple does start to pull back, you're going to head all the way down here. This is going to be your target range right here. So there's actually this is back to 175. So you're talking $25 to $30 drop on Apple once it achieves its upside here on the charts. Okay, taking a look at a couple other charts out there. SMH, I always get asked questions on the SMH. SMH has had an amazing run, but again, it's now knocking on the resistance of the recent all-time highs. So you have this pivot and this pivot right here. Could it go up a little bit more to this pivot point? Absolutely it could, but for the most part, you're into significant resistance here. And when this does pull back, you're going to see a significant pullback, folks. Again, everything I'm seeing is pointing to a pullback to this range, maybe this one, but it's all in the same range. You're still looking for a pullback to about $100 on the SMH. And again, I think it's a great short in this range. You could start a position here. You could add to a position here. Anywhere in this range, you're getting now into significant overbought territory, and you're into a significant double top pivot point. So there's a lot of resistance up here. And the funny thing is, too, the global economy is still kind of weak. We've seen some bright spots out of China, but the semis obviously are very reliant on China, which is part of the reason why they've come back so much, because people are very optimistic about China. But I'm in the camp that actually I'm looking at a potential short on China, guys. The FXI, which is now stalling today, has had an amazing run. The Chinese markets have had an amazing run. But look at this on the FXI, and this is what I'll leave you with, guys. And this is one of the reasons why I actually have it penciled in that we should top this week, and we should start to see pullbacks from this week for the next 4 weeks. Look at this. Look at all these pivot lows. Pivot, 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 pivot. Put a line right there. And what do you have? Look at that. That is called epic resistance. So the FXI is into epic resistance. We know that usually the stock market, the U.S. markets, if China's collapsing because people think that China growth isn't going to be as good of a comeback as they thought, the U.S. markets are going to be affected by that. There could also be trade deal issues that we're not hearing about yet that could be an issue. So, there's a lot of things here, in my opinion, that point to a very substantial, it's hard to say substantial, but at least a solid pullback in the markets based off of the FXI here hitting a high pivot. So keep this on your radar. Remember this chart on the FXI, folks. Let's check back in a couple days to a week or two and see where the FXI is, and we'll go from there. The other thing I'll leave you with is the crypto side of things. Bitcoin, again, holding its gains recently. It actually went up to the recent highs last night. And again, if it breaks through this 5,300-ish area, it's going to 6,000. And it's going to go there. Question is it in the next few days or in a month or so? I don't know. But it's going there, folks. And I continue to hold my whole position in Bitcoin, my whole position in Ethereum. I did dump my Litecoin last week just above $80 after making a 52% gain. That was a beautiful trade there. But again, I talked to the chat room about this at In the Money Stocks. I've talked to my members about this. I think it's crazy not to have some exposure to cryptocurrencies. Now, you don't put a lot of money in. Obviously, I look at it like a safety trade, like insurance. But with the Federal Reserve being pressured to cut interest rates from the administration, the Federal Reserve basically backing down from December, talking about 3 rate hikes, to late December saying no rate hikes, maybe a rate cut by this point. The U.S. dollar and currencies around the globe, you're looking at Europe printing just more and more money being printed, more and more debt being taken on. You're looking at Japan, China, all these countries, all these big countries, all they're doing is printing money. It's unsustainable. And one of the ways out is going to be cryptocurrency. So mark my words, I've said it, ad nauseum at this point, but you will see cryptocurrencies being, even now they're in their infancy. They will be a major player, and I'm a big fan of just tucking away some crypto and, again, stick with best of breed, Ethereum, Bitcoin, Litecoin, the top ones. But, yeah, I think that we will look back and say, man, I wish, we even bought more. Now, again, I think it's important you stay with allocations. You never want to overload on any stock. I run that in a lot of times with my members. I run that into that. Like, I have a big portfolio of like 10 or 20 stocks in my portfolio. They all know them. But, they'll see one alert and they'll be like, oh, that looks great. And they'll put like 50% of their account in it. And then obviously if that's the one losing, they're like, oh, no, but it's like diversification is key. Same thing goes with cryptocurrencies. I literally have 5% of my net worth in crypto. So it shows you that, yes, it's 5% still significant when you take into account real estate and all these other things, but it's not. We're not talking like if it didn't work out, I wouldn't even notice essentially because it's 5%. Now, if it works out and goes to 100K on Bitcoin, oh, that's pretty darn nice. But again, I encourage you to know your position size, know your risk tolerance, and understand all that stuff. All right, have a great one, guys. As always, I will talk to you soon. Take care.